Deriv synthetic indices are the best trading assets ever in the history of the financial markets. These assets have made trading very much easier for a lot of traders, as they come with a lot of advantages. For example, first, they can be traded with very low balance. You can place a trade and trade synthetic assets with as low as 50 cents, while paying no money in spreads. This is the biggest dream of every trader, but with synthetic indices, it is a reality. Another advantage is that you can trade these synthetic assets at any time in the market, 24/7. No public holidays, news reports cannot move the market, and they are safe from the manipulation of the whales and the big banks, leaving you with a pure price chart where good price action and indicator trading strategies can be traded with ease without the fear of losing your trades to unforeseen circumstances. But even while trading synthetic indices, there are also things you have to avoid at all cost in order to make profits trading them. I have been trading Deriv synthetic indices for more than 7 years now, and in this video, I will be guiding you through everything about Deriv synthetic indices trading. How to start trading synthetic indices, how synthetic indices work, the do and the don'ts, the best assets to trade while trading synthetic indices, and one of the best trading strategy that you can use to start trading synthetic indices as a beginner. All this I will be teaching you in this video. But before we get into all of that, do well to like this video and subscribe to our channel if you are encountering us for the first time. Now my tribe soldiers, let's get down into this business. Before we start, what are Deriv synthetic indices? Synthetic indices are financial trading assets, just like the currency pairs and stocks, but these assets are only offered by one broker, called Deriv, formerly known as Binary.com, a company that started in 1999. The synthetic indices, including popular assets like the boom and crash and volatility indices, are the native assets of Deriv broker. These assets have helped even the lowest of traders to start up with something small and make huge profits on the long run. In order to start trading these synthetic indices, the first thing you do is to register a new trading account with Deriv broker using the link in the description box below, and then open a synthetics real account on the platform. Bring the details to MetaTrader 5, add some money, and from there, you can start trading them on your chart with ease. When you have logged in your account on MetaTrader 5, you will be presented with a variety of synthetic assets on the quotes page, but those are not all of them. To get the rest, of which there are plenty of them now, giving a trader multiple choices in the market, depending on their strategy, all you have to do is to click on this plus button, and you will see groups of these assets that are available on Deriv platform. Here you will see assets like the basket indices, the volatility indices, the jump indices, the boom and crash indices, the tactical indices, the step indices, the skewed indices, and a lot more. All these assets moves and react in different ways. All of them are not the same. Their volatility differ, and they all move according to what they are called. For example, if you trade assets such as the boom and crash, you will get a different price movement than when you are trading assets such as the volatility indices and the step indices. Let's see an example of this. Now, for example, let's add one of the boom and crash indices on the chart, and let's also check out one of the volatility indices in the market. So here we have one of the boom and crash indices. We call this crash 1000. If you look at the information at the top left corner here, you will see a short description of how this asset works. Right here it says, on average, one drop occurs in a price series every 1000 ticks. Although this information won't reveal to you everything about the asset, but it will give you a hint on what's happening. Now, when you look at the chart, you can see that these candlesticks are moving in a very strange way. You will see these candlesticks move with body and no wicks, moving as though they were algorithms, and after a while, you start seeing large bearish candles spiking to the downsides. Those are the crash that we are talking about. At first, this movement looks very confusing, as you are probably new to them, but we have a trading strategy to trade them, a trading strategy meant for only boom and crash trading assets. And some traders have made this particular asset the only trading asset in the market, making them a lot of money in the long run. When you trade with crash, you expect bearish spikes and a lot of small bullish candles with no wicks. And when you trade with boom, you expect bullish spikes with small bearish candles, mostly with zero wicks. That is how the boom and crash indices works. Now, we also have another type of synthetic indices in the market, called the volatility indices. These indices are known for their pure price movements. Let's take volatility 75 for example. Here there is a balance between the movement of the buyers and the movement of the sellers in the market. Unlike boom 1000 where the buyers move with aggression and the sellers move in slow motion, or crash 1000 where the sellers move in aggression while the buyers move in slow motion. Now, when you are trading with volatility indices, both the buyers and the sellers move in aggression, depending on the market trend. When you look at the top left corner here, Deriv gave us a hint. It says, constant volatility of 75%, with a tick every 2 seconds. When you are trading volatility indices, you are sure to see the market moving with so much volatility and strength. And when you trade jump indices, you will also get so much volatility and pure movement from the market. That's why volatility indices are great. They feed you with variety of assets moving in different ways on the chart, different directions, different trends, unlike the currency pairs and the crypto market, where almost all the pairs move in the same direction and trend. Imagine trading in an ecosystem that presents you with different opportunities in the market, where you get to choose the exact ones you like and trade them according to your exact trading strategy and make consistent profits. That is mind-blowing. Here you are like a king, served with a buffet of options. But I have to be real with you. Although they are varieties of assets available on Deriv synthetic indices, they are some major assets that I have chosen for myself. Many traders like to trade the volatility indices and the boom and crash indices. These assets are great to trade, but if you are a beginner, I will strongly advise you not to trade boom and crash indices yet, as those assets are not for beginners. You will have to understand them and trade them with their special trading strategy in order to win while trading them. Not all price action trading strategy work on boom and crash. They are specific trading strategy we use to trade them. As a beginner to Deriv synthetic trading, they are assets you can start trading with. These assets helps you to elevate fast. These are the best assets on Deriv synthetic indices, and the reason why they fall into this category as the best synthetic indices is because of 2 reasons. The first reason is because they have a pure chart, a chart where the buyers and sellers move with the same volatility, no sudden spikes, and a precise trend movement. And the second reason is because these assets gives you the opportunity to trade with very low risk. There are assets amongst them that you can trade with less than 50 cents. This is really amazing. But if you have the money, why trade with 50 cents? When you can trade with $100 and make more money from the market. These assets are called volatility indices and the jump indices. These are the 2 assets that I mostly trade in Deriv synthetic indices. And if you have joined my Telegram channel, you will see me trade these assets a lot. Those in my mentorship program receive highly profitable signals from me trading these assets. But I tell you guys, amongst these volatility indices, there are some that their lowest lot size can blow your small account away in seconds. Volatility assets, such as volatility 100 and volatility 25-1s, are very volatile for small trading accounts. Make sure you have a strong balance to trade those particular assets before trading them. But other volatility assets, like volatility 75, volatility 50, volatility 10, and the rest have good tolerance for small trading accounts. But always remember to apply risk management and understand your risk ahead according to your account size by examining the strength of their lot size. Before you trade them, you can determine your risk ahead by using the limit order test strategy. You can do this by clicking on the limit order button on MetaTrader 5 and then draw it to any position that you want to trade the market from. To be able to calculate your risk after doing this, you can click on either the stop loss or the take profit button and then draw it to your area of stop loss or take profit target that you want to analyze in the market. Then you can adjust the lot size on the account till it matches your risk, and by doing this, you prepare ahead of time for your risk and profits. You will also know the exact lot size that is suitable for your risk. Double check this each time you are trading on a new asset on synthetic indices, and you will never be caught off guard by the market. Now, let me teach you guys a simple trading strategy that you can use to make money on Deriv synthetic indices. This strategy works good for volatility indices, jump indices and step index. In fact, any synthetic indices that moves with a good balance among the buyers and the sellers in the market. You can trade it on any synthetic indices that have a pure chart. Please don't trade this particular assets on boom and crash. I will teach you all a boom and crash trading strategy in a future video, so make sure you subscribe to our channel right now so you don't miss out on it when it drops. This is a simple trendline strategy, but when you are trading it with synthetic indices, it is 10 times stronger. In order to trade this strategy, all you have to do is find a fresh trend set up on the chart of your target index. For example, on the chart here, we have a fresh uptrend setup composed of a low, a higher low, and a higher high. Then draw your line on the two lows of the setup, and when you have done that, you wait for the market to return to the line. Any of them is perfect, but if you don't see one of these two, please avoid that trade like a plague, because you are about to take a loss. Yes, other candles work sometimes, but not often, and when you have seen that, for example on this chart, we already have a bullish engulfing candle here, so we are free to trade the market. So we can take a trade, placing our stop loss below the engulfing candle and our take profit target at the next high. Now, if we had taken this trade, we would have been risking this amount of money and making this amount of money on the trade, giving us a great profit for our trade with a very low risk. And as you can see, the take profit target was hit successfully. Now, let me show you another example of this strategy on a jump index. So right here, we are on jump 50 index, and we have the market moving in a fresh downtrend formation. And you know that when you see the market form a structure like this, with a high, a low, a lower high, and then a lower low. So you connect the highs together by drawing your trend line on them, and from that point, you wait for the market to return to the line. And then you expect to see either a pin bar or an engulfing candle. And when that has appeared on the chart, for example, here we have a bearish pin bar formed after touching the trend line, giving us a go ahead to enter the market. So we can take a trade, placing our stop loss above the pin bar and our take profit target at the next low. So for example, if you traded this particular setup with this amount of risk, you will be making this huge sum of profits. And right here, we have a good trade. Our take profit target was hit successfully. This is how we make money on synthetic indices, without fear of the economic news or the manipulations of the big banks, and you don't expect those sudden spikes, except you are trading assets that are meant to spike a lot, like the boom and crash and the range indices. So if you are trading the trendline strategies or any other trading strategy that works particularly for that synthetic index, as long as your strategy is great, you will make profits, because right here on synthetic indices, what you analyze is what you get. There are no fundamentals, it's pure technical analysis. Get your account ready by clicking the link in the description box below to start trading synthetic indices with ease. I also manage Deriv Synthetics accounts that have a trading balance of $1,000 or more. Terms and conditions apply. Now, in our future videos, I will be teaching you all on other trading strategies that we use to trade Deriv synthetic indices, how to trade boom and crash, and a lot more. I will see you guys in the next one.